Investors, hello. This is AI Crypto Insights channel, a few minutes of AI-powered insight into the market. Just a reminder, this is for educational reference only, not investment advice. Today, we're parsing a blog post from asset manager Bitwise that lays out 3 really key tests for crypto's 2026 rally.
So, the crypto market has kicked off 2026 with some serious energy. In just the first week, both Bitcoin and Ether jumped about 7%, and we saw even bigger surges in some of the more speculative tokens. What that tells us is that investor risk appetite is making a strong comeback.
And that, of course, is the multi-billion-dollar question on everyone's mind, right? Can this early momentum actually last, or is it just a flash in the pan? Well, the asset manager Bitwise has been digging into this exact problem. To figure this out, Bitwise has laid out a really clear framework. They've boiled it all down to 3 key tests that they believe will determine if this rally has legs. So let's dive in and see what they are. So here they are, the 3 big hurdles. According to Bitwise CIO Matt Hogan, for this rally to really continue, it first needs to get past some lingering market instability. Then it has to navigate the super complex world of US legislation. And finally, it has to be able to withstand any potential shocks from the traditional stock market. Okay, let's get into that first test, market stability. And here's the good news, Bitwise thinks the market may have already passed this one. This whole test is about asking, is the ghost of last year's volatility truly behind us? Now, to really get what they mean, you have to rewind to that massive liquidation event on October 10th, 2025. On that one single day, a jaw-dropping $19 billion in crypto futures positions were just wiped out. The fear that lingered after that was that it could trigger a domino effect, forcing big funds to keep selling off assets for months to come. But here's the thing. Bitwise argues those fears have pretty much eased. Their logic is pretty simple. Any major forced sell-offs likely would have already happened by the end of last year. The market's strength right at the start of 2026 suggests investors have moved on. So test 1, check. Now for the second and maybe the most important test of all, US legislation. Hogan points straight at Washington, D.C., calling it the biggest open question out there, where, the outcome is far from certain. And this quote from Hogan really hits the nail on the head. He makes it crystal clear that a comprehensive U.S. market structure bill isn't just a nice-to-have. He calls it a critical milestone. It's that important for the long-term health and institutional adoption of crypto. You can really see the tightrope that regulators are walking here. On one hand, a clear bill could unlock a huge new wave of institutional trust. But on the other hand, there are still some major disagreements. We're talking big hurdles, like how to regulate decentralized finance, or DeFi, the whole debate around stablecoins, and of course, good old-fashioned political gridlock. So where does that leave us? Well, Bitwise is calling the outlook cautiously optimistic, but the key word there is unresolved. It feels like the momentum is positive, but whether any meaningful legislation actually gets across the finish line, that's still very much an open question. And that brings us to the third and final test. What's so interesting about this one is that it isn't really about crypto at all. It's about the broader equity markets. This is the key external risk, the one that comes from outside the digital asset world. Now, look, crypto isn't always tightly correlated with stocks, but a major shock to the system would definitely have an impact. I mean, think about it. A sharp 20% drop in the S&P 500 would almost certainly drag down all risk assets in the short term, and that definitely includes crypto. For now, the coast seems relatively clear. Prediction markets are signaling pretty low odds of a recession. But, and this is a big but, this remains a wild card. A sudden downturn in traditional markets could put the brakes on crypto's momentum in a hurry. Okay, so after looking at these 3 tests, one passed, one unresolved, and one an external risk we just have to watch, what's Bitwise's final take for 2026? Despite all the hurdles, Bitwise argues the fundamental setup for crypto is still constructive. They're pointing to these really powerful underlying trends, like growing institutional adoption, the explosion in stablecoin use, and more real-world assets being tokenized on the blockchain. These are some strong tailwinds pushing the whole industry forward. All right, let's boil all of this down to the final verdict. What is the one key takeaway from Bitwise's framework for 2026? AI analyst verdict? Bitwise believes crypto's early 2026 momentum could be durable, but it really hinges on 2 things: continued progress on legislation and stability in the broader markets. The internal market structure seems to have healed, but now it all depends on Washington and Wall Street. What are your thoughts? Share them in the comments. See you next episode.